Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets for Monday the 7th of July. The European session has started again fairly quietly, and that is coming with a little bit of lack of direction really, following on from the public holiday that we had in Wall Street on Friday from Independence Day. But over the weekend we had the IMF come out with some fairly negative comments about global growth, possibly suggesting that they might even cut their forecast for global growth in the second half of the year, due to the lack of investment they're claiming. So that's put investors slightly on the back foot in Asian trading, and also European trading as well is slightly lower. FTSE's down 0.2%. DAX down 0.3, CAC around the same as well. So just slight losses in the early European session. The dollar continues to recover following on from that strong payrolls figure that we had on Thursday, and we continue to pull back towards this. I think towards this 80 spot 4 level, which tends to be a bit of a pivot level, and I've talked previously about this band between 80.4 to 80.6 being fairly pivotal. I think that's not too far off that now, so it might suggest that the dollar could begin to run out of steam, but we'll wait and see how that moves. Another reason why the European markets might be slightly lower is the fact that German industrial production fell to a 2-year low in actually the lowest industrial output for Germany for 2 years, and that came out early this morning. So that's not a great bit of data for the European markets either. So a bit of pressure to the downside in early trading, as I said. In terms of my chart of the day, first of all, there isn't also no real economic data out today, so it could potentially be a fairly quiet morning European side until the States comes in this afternoon. In terms of my chart of the day, I'm going to be looking at the euro sterling. And euro sterling just remains under pressure really to the downside, but it is now once again getting towards oversold on the RSI. It's looking a little bit stretched to the downside below that 30 mark. Also the stochastics as well, but there is a slight possible bottoming in the stochastics and the RSI as well. So maybe this recent run lower that we've seen has got a little bit stretched, and maybe there's going to be a bit of a technical consolidation period or even a rally. What you'd be looking at for a technical rally in terms of the resistance on the upside, you'd probably be looking at the first real resistance that comes in around 76.60. But that would once again, I think, be a chance to sell. Look how many times this, zoom in a little bit more, look how many times this green 21-day moving average has been used as the basis of resistance numerous times over the past 3 months. That currently comes in at 79.95, so there is room for a technical rally in this euro before what would likely to be further selling pressure in the euro. But at the moment, there is a slight element of a recovery. Certainly euro sterling is just showing a bit of a green candle, which suggests perhaps a bit of consolidation is already beginning to creep in. So just watch out for that. You might get another opportunity to sell higher up in this one. So if you're chasing it on the downside, just be very mindful that you may well get a bit of a rally in this chart in the next few days. Okay, well that broadly is my look at the euro. Just very quickly on the intraday chart, there's nothing really to go on majorly there, although there is a slight bullish divergence or positive divergence, you'd say, on the RSI on the hourly chart. And that might suggest again that this selling period that we've been in for the past 4 or 5 days is beginning to slow down, and could well suggest a bit of a recovery maybe on the way. Anyway, I wish you good luck in your trading on the euro sterling today, and I will speak to you later. Thank you.